Hello, everybody, and welcome to Accounting 202A After Dark. This is KESO Exercise 8-22. So here we've got dollar value LIFO presented below as information related to Dino Radja Company. And so here they're asking us to compute the ending inventory using the dollar value LIFO method. So what this is really here to do is in terms of to help us with inflationary times and to try to go through and to kind of compute, to create layers so that if there is a change in the price index or if there is, it's kind of essentially to mitigate some of the effects of LIFO if inventory is liquidated. So here we go. The way we're going to go through and do this is we're going to take our current year and divide by the price index. And this is going to give me the inventory at the base year prices. So for the first year that we're going through and doing dollar value LIFO, this really isn't going to have that much of an impact. So if we go to 12, 31, 17, and the index really refers to the inflationary index. So when you see a 1 at base or 100%, it basically means it's at the base year. So what I'm going to do is I'm going to take 80,000, which is the inventory amount as of December 31st, 2017. My index here is 1. I divide the 80,000 by 1. And so my base layer is going to be right over here at 1. And this again is going to be for the first year. My index is appropriately right over here, is at 1. So basically my inventory at dollar value LIFO for year 1 is really going to be the same dollar amount. So this is going to be right over here at 80,000. And for the first year, we don't have a reserve. So this first year right here is the base layer. So right over here, the next one is going to be 12, 31, 18. So this is going to be 115,500. And my price index is 1.05. So what I'm going to do is so I can compare this 115,000 to the prior year, I need to divide it by 1.05. And when I get this, I get $110,000. Now, when I look at this, basically it's 110,000. Now this amount, because I'm dividing it by the price index to essentially compare it to base year, just shows me 110,000. So now what I'm able to do is I'm able to say, okay, of this 110,000, 80,000 was here from before at an index of 1, and then I added on a layer. The amount of the layer that I added on is going to be 110,000 minus 80,000 or 30,000. But when I go through and do this, when I have this 30,000, this 30,000 is going to be at that current year price index or 1.05. So the inventory under dollar value LIFO is going to be 80,000 times 1. And then over here is going to be 30,000 times 1.05 or 31,500. So when I add up these two amounts right here, this gives me 111,500. So this is my inventory at dollar value LIFO. So the difference between this amount here and this balance, it's going to be the amount of my LIFO reserve. So when I subtract 111,500 from 115,500, I have a LIFO reserve of $4,000. So let's take a look at the way that this is going to be looking for us. So here in 2018, the inventory amount is showing here at 115,000. My LIFO reserve is at 4,000. So my inventory that I'm showing under dollar value LIFO is going to be 111,500. Okay. So we've got 2018. Okay. For my journal entry for 2018, what I would go through here and do is I would be debiting cost of goods sold for the amount of the reserve, because as a reminder, I've got to show this here at so I'm going to debit cost of goods sold to show that impact. And then over here, I'm going to be decreasing inventory. And this is really my inventory reserve to reflect at dollar value LIFO. So my journal entry is going to be a debit to cost of goods sold. And here it's going to be an inventory reserve to record inventory at dollar value LIFO. Okay, so you can do this in the form of a reserve. That is definitely a way of doing it. Okay. Okay. So again, what did we do here? Let's just kind of go back and take a little bit of a recap. So when we're doing dollar value LIFO, what we are given is we're using dollar value LIFO. And again, we're going to be creating layers. And this is, the step 2 right over here is that determine if a layer has been added by comparing the total base year later to the one that's in the prior year. If the inventory is greater, which it was in this case, we're going to add a new layer beyond the base at the current year price index. If it's less, we're going to remove the most recent layers. And then we go through and do these other steps. So let's go through and let's go over here to our next case right over here, which is going to be 12/31/19. So my inventory at the end of year prices is 108,000, and this is going to be at 1.2. So right over here, I've got 108,000 times 1.2. Excuse me, 108,000 divided by 1.2, or I get inventory at base year prices over here at 90,000. So in this case, I did not add any layers. Rather, I removed a layer, and it's LIFO, last in, first out. So what I'm going to do is of this 90,000, this 80,000 at 1 will still be here. But what I need to do, because right over here, it's at 90,000 when comparing it to the base, I need to take out 20,000 out of this one over here. Okay. So this is going to be 80,000, 10,000 for the total of 90. And this is going to be at 1.05. When I multiply this through, I get a total over here of inventory at dollar value LIFO of 90,500. So my LIFO reserve is going to be the difference between my ending inventory at the end of year prices, which is the 108,000, less my dollar value LIFO, basically the amount I'm adding up over here. Or my adjustment, or this needs to be 17,500. So when I go over to 2019, my inventory here is now going to be at 108,000. My reserve, though, now is going to be 17,500. So my inventory at dollar value LIFO is going to be at 90,500. Okay, here's the fun part. When we go over to 2019 and I'm doing my reserve, okay, so my reserve to adjust to dollar value LIFO, we'll call this my inventory reserve. So over here, my inventory reserve, and this will be a contra-asset type account. So my balance at the beginning of 29/19 would be the ending as of December 31st, 2018, or $4,000. My new balance here is not a shoe, but rather my new balance is going to be 17,500. So my adjustment for 2019 is going to be the difference here, or 13,500. So this is one of the trickier parts in terms of going through and doing this type of question. But I assure you, with lots of practice, you'll be getting better and better. So the format of the journal entry is always going to be the same. I'm debiting cost of goods sold, and I'm crediting the inventory reserve to record inventory at dollar value LIFO. And that's what I go through and do. And so this will become my ending balance at December 31st, 2019, which is what's being reflected right over here onto my financial statements. Okay. Let's go ahead and take a look now at December 31st, 2020. So at December 31st, 2020, our ending inventory at end of year prices was 122,200. And my price index was 1.3. So 122,200, okay. So what I need to do is I need to make this current year, put this into the base year. So I'm going to divide this 122 by 1.3 and I get 94. Well, the amount of this exceeds the prior amount, so I'm going to be adding on a layer. The amount of the layer that I add on is going to be the difference between these two. So I'll still have the 80,000 at 1. I'll have the 10,000 at 1.05, but now I'm adding 4,000 at 1.3. So when I multiply these through, I get a total over here for my inventory under dollar value LIFO of 95,700. So my reserve for LIFO is going to be 122.2 minus 97.5, or a total of 26,500. So if I go to the balance sheet over here at 2020, my inventory shows 122.2. My reserve now is going to be 26.5. So my ending inventory under dollar value LIFO is this 95,700. When it comes over here to recording the journal entry, we have to remember that we already have a balance in the account. So when I come down here, and if I pull here, so this is going to be 1,120, and this has a balance of 17.5, and my ending balance for dollar value LIFO is going to be 26.5. Uh-oh, hold on, I did the wrong one. 17.5, so this needs to be 26,500. Come up with a different color, always nice. So 12/31/20. The difference between these two here is going to be $9,000. So my adjustment for 2020 for the dollar value LIFO is going to be $9,000. So as I'm going through and doing this, what would the exam look like, right? Well, I can ask you, I'll probably ask you for the balance sheet presentation, and I can also ask you to do the journal entry. But as we can kind of see with practice, we kind of see what the repetition is here. Okay, so I got 2 more years. So 12/31/21. The inventory at the end of the year prices is 154,000. And the price index was 1.4. So when I divide this through, I'm going to get 110,000. So I've added a layer, and the layer that I've added is going to be difference between this 110,000 and the 94,000, or about $16,000. So I'm going to go through here. This 80,000 layer is still here. This layer is still over here. This is still here. But now what I'm doing is I'm adding a layer, or the difference between or 16,000. I use the current year index right over here, 1.4, and then I'm going to multiply these through. So when I add these four values up, I got 118,100. The difference in my LIFO reserve is going to be 39,500. Okay. So for 2021, my inventory amount is going to be 154,000. My LIFO reserve is 35.9. My ending inventory at dollar value LIFO is then at 118,100. So my journal entry for 2021 is that if I take this balance here and my ending balance, my beginning balance is 1/1/21, was 26.5. And as I come over here, the ending balance as of 12/31/21, we said was 35,009. So the adjustment that I need to make in the current year is going to be 9,400. Now, I've had a few students ask me, it's like, well, what happens if the reserve, say, becomes less and like a deflation? Then you would just go through and just reverse the inventory. You would debit the reserve and you would credit cost of goods sold. That's probably what I would do. And I'm grading your test. Okay, so the next one over here is December 31st, 2022. We've got an inventory of 176.9. And this is going to be at 145. So when I divide this 176.9 into the 145, it looks like I'm adding on yet another layer. Okay, it's not like a dragon. All right. So I'm adding on a $12,000 layer, or the difference between the 122 and this 110. So what I'm going to do is follow the same path. And I'm going to take 122 minus what I already have in terms of my layers. So I get 12,000. So again, this key first step is to take this inventory here and to put it into the base year prices so we can go through and compare these different items. So now what I do, I got 1, 1.05, 1.3, 1.4, and then my new layer is going to be 1.45. So as I go through, I'm going to multiply each one of these through. And when I add all these up, I get 135.5. So my ending balance over here is going to be 41,400. So balance sheet presentation is going to be 176.9. My reserve is going to be 41,400. And my ending inventory valuation is now being shown at dollar value LIFO. When I come over here to 2022, what I have to do now is that my inventory reserve, this is going to be 1/1/22, or this prior balance here. Come up with a groovy new color, Emperor's New Groove. And so my ending balance here is going to be 41.4. So my adjustment to bring basically to get to inventory at dollar value LIFO is going to be 5,500. So here I would be doing a debit to 5,500, credit for 5,500. Again, I'm debiting cost of goods sold, and I'm crediting my inventory to record my reserve to reflect inventory at dollar value LIFO. So that is exercise 8-22. Like all of the other questions that I will always give you, my suggestion is to practice with this one. It is on your exam. And so have fun with it, and I'll see you on the next video. Have a great one.